Good morning and welcome to today's pre-market video. Now in today's pre-market video we'll take a look at three stocks: Indian Energy Exchange, HDFC Life and Asian Paints. Now Asian Paints and Indian Energy Exchange were basically requested by some of the viewers of these videos in the comment section and by WhatsApp also, while HDFC Life is one I think also which is at an interesting stage, so I'm covering all three. Now before we go into that, let's take a look at the news. Now as of when I'm recording this video, the American market is pretty flat. The futures are mixed and the market is open mixed also. This is basically the tech sector is playing around with them, so there's nothing really much we can absorb from there to our Indian market. But now anyone who's trading the indexes knows we have been severely range bound, and I believe that basically the Nifty, BANKNIFTY and Sensex are still at a 50-50 point where they're still deciding whether to go up or whether to go down. Me and clients are holding CE cells which were entered last week on basically a Friday, so they've already made them profit, as nearly 70% of the premium, 70 to 80% of the premium available from when we sold the options on Friday when they were very expensive has been collected as an option seller. So in fact we did a good amount of profit booking in them yesterday, but still hold some with profit stops. Now why I did the profit booking is right now the indexes are at a confliction point, and I think the news of now Reliance will sort of increase the confliction point in the whole thing. This is Reliance has said that they want they're seeking up to a $3 billion loan to partially refinance debt due in 2025. I have found it very ironic because I remember, I think it was about 1 year ago in the AGM, Mukesh Ambani himself stood and said that Reliance would be one of the first companies in India to be fully debt free, big companies, and now he's seeking a $3 billion extra loan. But I think that Reliance will get it because of Reliance's links to the government. So no bank in India will refuse to refinance debts for them and even increase the debt quantity. So it will be interesting to see how that affects our market today and how it also affects the Nifty. This is Reliance is a Nifty heavyweight, so it's going to affect the Nifty and Sensex severely. So Reliance's share performance will be interesting to watch. The other news is the cement dealers have hiked prices incrementally across India. Highest rises seen in South India and Eastern India markets. So that's something which will help the cement sector. And then the other news is related to basically the delivery sector, as Amazon is piloting a 15-minute delivery scheme with Tez to take on Swiggy and Zepto. And now since Swiggy is in the market, it is something that I think Swiggy and Zomato even their shares will be affected by this in the coming thing. Then the other thing is the general aviation industry across the world. The net profit is expected to totally improve by $36.6 billion in the whole of 2025 due to oil prices going down. This is according to IATA. So that's also positive for the aviation sector with stocks. So that's it on the news front. Now let's pop on to the three stocks. I'll first cover Indian Energy Exchange, after which I'll cover HDFC Life, then I'll cover Asian Paints. Now, as I said, Indian Energy Exchange has been recommended to be covered by one of the video viewers. Now, when I look at Indian Energy Exchange, in the past it has had a very big fall, as it has managed to fall basically from roughly 250 rupees to 160. So that has shaken off a lot of the hands. But now the big question comes in this up move, which is it has recently had, whether it's a dead cat bounce up move or it's a real up move. But now I think that will be answered only by this resistance zone. This year we have a simple resistance zone at 190 and we have a quant resistance zone at 196. So if Indian Energy Exchange is able to break above this resistance zone, then it's sort of broken the bearish shackles and will head up to 212 and 225. But if it ends up getting rejected at this sub-resistance zone between 190 and 196, then we can basically expect it to go here, get rejected, then come back down to the support first at 175, and then once if it breaks 168, it will be going down to 150. So according to me, the guy who did would request this stock to be analyzed, it is an interesting thing because it's at a 50-50 point. If it breaks this resistance, it's going to do very well in the coming weeks and months. If it gets rejected at this resistance, then it's going to be heading down in a big way, as it will sort of be forming the second wave. This was the first wave of the fall. We have had a basically retracement, and now it will be forming the second wave. So this resistance zone is what everyone who is monitoring Indian Energy Exchange should watch, as it's key. So that is it for Indian Energy Exchange. Now let's take a look at HDFC Life. Now HDFC Life is also at an interesting point. Why I say that is it has had a good fall also, but it's not in that bad a condition as most of the heavyweights, most of the blue chip stocks in India. This year, most of the blue chip stocks in India, like even Asian Paints will be covering after this, they've got completely wrecked. September, October, November have demolished completely. The earlier part of the year, they were non-performers, they were box range. Then from September, they were just broken down completely by foreign investors selling and all the other factors coming in, the exchange doing nonsense and everything. So now HDFC Life was one of them, but it has not taken that huge a hit. As it has fallen, but the good thing, it has fallen back to its 200-day moving average. So now the big question is going to be, what can you do with the stock? Now, I do not hold any position in HDFC Life, and I don't think I'll be opening anytime soon any here. But now anyone who is looking at it in terms of an investment perspective, now it will be very important to see if HDFC Life holds the support range between 605 and 622. This is right now, it is very close to 622, and this is a volume support. The ones who have been watching my videos from long know I have a volume indicator and I pay special credence to it. So what I'll be watching is how it handles this volume support plus how it handles this con support at 605. If it's able to hold these two supports, then it will be having a dead cat bounce to the resistance zone between 660 and 672. If it breaks that, then 705 and 730 open up. Now, basically another factor for this stock is the F&O space. Why I say that is this stock is an equity and F&O. As I said, equity, I don't think I'll be taking part in HDFC Life, as I think there are many better stocks out there which can be used to make money, but this is something that's good for options. Why I say that, if it manages to show strength at the volume between the volume support and 605, then it can be a good stock to sell puts below this and calls above this point. And those is basically, if you have got spare capital and spare good capital, as option selling is more capital than it did before. If you have got that capital, then you can end up selling calls above 660 to 672 and puts below 605 to 622, and you should make good money simply from the option decay. Naturally, the aggressive option sellers can use the first support and resistance, and the less aggressive, the cautious guys can use the second resistance and the second support as an option selling point. Basically selling the range and letting it going and dilly-dallying about in that range and earning easy money. It won't be the best of profits, but it will put your money somewhere and it will earn a return which will be still better than what a bank will give you or anything. So that is my trading plan for HDFC Life. Now we'll take a look at Asian Paints. Now coming to Asian Paints, to say that this is a stock that has been beaten up is an understatement. I say that as if we look at it, the stock has managed to take a fall from 3,400 rupees to come down to 2,380 rupees basically, 2,388 rupees. Now the big question is, when will Asian Paints fall? Stop. Now according to me, Asian Paints is approaching a very critical point. It's about 4% away from 2-4% away from the very critical support, and also 2 to 4% away from the very critical resistance. So now, according to me, Asian Paints will be trading between a box range between 2535 and 2580 on the upside, and with support will be from 2280 and 2340. Now, as long as Asian Paints is within this zone, you're not going to get much. Naturally, an equity investor should not try this zone, as you're just going to get your hands burnt. But if it manages to hold this support, then it can have a good time and try to have a dead cat bounce to this resistance. And if it breaks that, then 2,700. But if it manages to break 2280, then it will be going to 2120. Now, as of now, the chart is completely bearish, and all signs point to it going to 2340, then 2280. It breaks that, 2120. So it will be very important to see once it reaches these two support zones, how it handles them. As if it keeps the volume how it is right now, heavily with the bears, then this stock is a goner, is going to 2120, and by chance, I've not added those levels here, by chance it breaks 2120, I'm seeing a support at 1850, which will completely break equity investors who, because I'm very sure there's going to be a lot of people who are holding Asian Paints still in the portfolio from this point. Because I have seen a tendency in the Indian market that provided it's a blue chip stock, it's in the big leagues of the Nifty 50, Nifty 500 and all, these people will just buy the stock and hold it because it's in the Nifty 50 and above. So Asian Paints, I think right now as an equity investor, don't touch. As an option trader, you can touch it, you can sell this range for now. If it breaks this, then option buyers will get a fresh good shot. I don't think option buyers should try to short it now, as it's smashed, but it's smashed in a way that a dead cat bounce can happen at these supports which I've given. So this is more of an option seller stock, not an equity traders and not an option buyer stock. Equity trader can only come in if it shows strength here or it shows strength here. Otherwise, not advisable for an equity investor to buy this, as you'll be buying a falling knife which will completely wreck your portfolio, and most people's portfolios are already wrecked due to what has happened to the stocks this year. As let's say past 2-3 months, as the stocks have fallen some to by 60%. So it has shaken a lot of people's faith in the market and portfolios too. So that's it for today's video. Thank you for watching. Any questions, drop them in the comment section below. Any stocks you want analyzed, drop them in the comment section below. If there's something interesting to talk about it, I will cover it. If there is not, then when it shows up to be interesting, it will be covered then. Thank you.